Hey everyone, welcome back to Corporate Decoder, the place where we try to understand how companies try to hide things from you by making their filings sound like they are reading a toaster manual. So join me as we try to decode what the heck is actually going on. Today we're diving into some juicy news from Intelligent Biosolutions Incorporated. Now, this isn't your typical quarterly earnings report. This is a Form 8K, which usually means something pretty significant happened. And in typical fashion, they announced some equity compensation. Let's see what that means for us. And before we get into the nitty gritty, if you love getting these kinds of straight to the point breakdowns of corporate filings, make sure you hit that subscribe button. Also, if you want to join a community of like-minded investors and chat about all things finance, the link to our Discord is in the description below. So this report is filed with the US Securities and Exchange Commission, or SEC, which is the government agency that oversees the stock market. Companies have to file these reports when certain significant events happen that investors should know about. Think of it like a company's public diary for big news here. We see they are filing a Form 8K, which is for what they call current reports, meaning something important has just come up. The company we are looking at is Intelligent Biosolutions Incorporated. You might know them from their stock ticker symbol, which is INBIS on the NASDAQ stock market LLC. They're incorporated in Delaware, which is pretty common for many companies, and their IRS employer identification number is 82 to 1,512,711. They also have these checkboxes here, and they are basically asking if this report is also being used for any other special communication rules related to securities laws. In this case, none of the boxes are checked, meaning this 8K is solely for reporting the current event and not for any other special communication purposes. Looking at their registered securities, their main offering is common stock with a par value of $0.01 per S-share. This is basically the minimum legal value assigned to their shares. The trading symbol for this stock is INBIS, and it is traded on the NASDAQ stock market LLC. Now this box here is pretty important. Intelligent Biosolutions Incorporated is declaring itself an emerging growth company. What does that mean? It means they are a relatively young company and they get some special treatment under the law. They can take advantage of regulatory perks, like having a longer period to comply with new accounting standards. But they also have to clearly state if they are choosing not to use those extended transition periods. Here, they have elected not to use the extended transition period for complying with new or revised financial accounting standards. So even though they are an emerging growth company, they are choosing to follow the latest accounting rules right away, which usually shows a commitment to transparency. Alright, this is where the meat of this particular filing comes in. We're looking at item 3.02, which deals with unregistered sales of equity securities. What does unregistered mean? It means they are selling or issuing shares of stock without having to go through the full formal registration process. With the SEC, there are specific legal reasons why companies can do this. Usually when the shares are being issued to a small number of sophisticated investors or as part of certain compensation packages. So here is the key event on the 25th of November 2025. The board of directors of Intelligent Biosolutions Incorporated decided to issue 75,000 restricted shares of the company's common stock. Now these aren't just regular shares you can buy on the open market. Restricted shares means there are limitations on when and how they can be sold. These 75,000 shares with that nominal par value of $0.01 are being given to a company called MDM Worldwide Solutions Incorporated, or MDM for short. And here is the kicker. This is not a cash transaction. These shares are being issued as equity compensation. That means MDM is getting paid in stock for the services they provide. What kind of services? Strategic communication, advisory, and consulting. This engagement started back on the 11th of September 2025. So basically, Maryland M is helping Intelligent Biosolutions Incorporated with their communication strategy, and in return, they are getting a slice of the company's stock. This sentence is super clear. Intelligent Biosolutions Inc. is not getting any money from this deal. They are paying MDM with their own stock. This is a common way for companies, especially those that might be a bit tight on cash or want to align incentives to pay for valuable services. By giving MDM ownership, they're hoping MDM will be extra motivated to do a great job, because the value of their compensation goes up and down with the success of the company. And how did they get away with not formally registering these shares with the SEC? They are using an exemption under Section 4(r)(2) of the Securities Act of 1933. This section basically allows private companies to issue securities to a limited number of sophisticated investors without the need for public registration. It is designed to facilitate private capital raising. So Intelligent Biosolutions Inc. is telling the SEC they are operating within the bounds of this exemption for this issuance. And finally, we have the signatures. This is where the company officially signs off on the report. Here we see the signature of Spiro Secouris, who is the Chief Financial Officer. This indicates that he has reviewed and authorized the filing of this report on behalf of Intelligent Biosolutions Incorporated. The date of this signature is the 28th of November, 2025. So just a few days after the board approved the share issuance. So what is the big picture here? Intelligent Biosolutions Incorporated is using its stock as currency to pay for strategic communication services from MDM Worldwide Solutions. As an emerging growth company, they are leveraging certain regulatory freedoms. This move signals that they are actively working on their public image and strategic messaging, which can be crucial for a company in the biotech or solutions space. The fact that they did not receive cash proceeds means this is purely a service for equity exchange. For investors, this means understanding that 75,000 shares are now out there, not bought on the open market. And their impact on share dilution depends on the total number of shares outstanding. If this is a significant chunk of their total shares, it could put some downward pressure on the stock price in the short term. However, if MDM's consulting leads to significant positive developments, the long-term impact could be very beneficial. It is a calculated risk, rewarding expertise with a stake in success. Now, looking at the broader context for a company like Intelligent Biosolutions Inc., getting their message out effectively is vital. Whether this move with MDM will translate into tangible business growth or a stronger market perception remains to be seen. It is a strategy that can pay off big if the consulting yields results. However, it also means that existing shareholders are now sharing ownership with a new party. We'll be watching to see if this strategic communication boost translates into solid financial performance down the line, as we typically focus on the numbers here anyway. Alright, that is our quick decode of this Intelligent Biosolutions Inc. 8K filing. What is your take on this equity compensation move? Do you think it is a smart way to pay for services, or does it raise any red flags for you? Drop your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more regular dives into the corporate world. And of course, don't forget to check out the Discord community link in the description for more discussions. Thanks for watching, and we'll see you in the next one.